Hello students, I'm Vipul Mittal, and in this session I will discuss how you will calculate average accumulated expenditure for the purpose of interest capitalization. So if an asset requires some activities to be done before it can be used and interest is incurred during that period when these activities are carried on, you capitalize interest. Now, the amount of interest that is capitalized is calculated by applying the capitalization rate to the average accumulated expenditure. So you need to know average accumulated expenditure that you may calculate the amount of interest to be capitalized. Now, how you calculate this average accumulated expenditure that you may calculate interest to be capitalized? All right. Now, this average accumulated expenditure on which you calculate interest is the weighted average. All the expenditure that you have made so far, you take a weighted average of that. And how you do that, let's take an example on this. For example, you are constructing a building. Already you have spent $300,000 in earlier years, and we are talking about year six. So in year six, so at the beginning of year six, accumulated expenditure is $300,000. This is the amount that you have spent in earlier years. All right. Let's say you spent $60,000 more on August 1. So your total accumulated expenditure becomes $360,000. All right. You spent another $120,000 on December 1. So it becomes $480,000. This is your accumulated expenditure because we have to find out your average accumulated expenditure. And this is the status of your accumulated expenditure on various dates. And we are trying to find out your average accumulated expenditure for year six. And this average accumulated expenditure is weighted average. So you consider number of months. In this year, this is outstanding, kind of you can say. From August 1st to December end, it is 5 months. And from December 1 to December end, 1 month. Comes to $300,000, $150,000, $40,000. Total is $490,000. All right. This is your average accumulated expenditure for year six. All right. But if expenditure dates are not available, so here we know that you have spent $60,000 on August 1, $120,000 on December 1. So we know your expenditure dates and we are able to calculate average accumulated expenditure. But if expenditure dates are not available, then we have to assume that expenditures are made evenly throughout the year. So how much you have spent during the year? $180,000. $180,000 you have spent during the year, and it is assumed that it is spent evenly throughout the year. So how you calculate average accumulated expenditure? So suppose we do not know the dates. So year six, Jan 1, we know that it is $300,000. And on December 31st, it is $480,000. All right. So on December 31st, it is $480,000. This is what we know. We do not know the exact dates. All right. But we know beginning and ending accumulated expenditure balance. So how you calculate average accumulated expenditure? So you take the beginning balance, you add the ending balance to it, and divide it by 2. So it is $390,000. This is your average accumulated expenditure, and this is what you use in calculating your amount of interest to be capitalized. If you're provided with the dates of expenditure, then you can accordingly calculate your accumulated expenditure and accordingly calculate your weighted average. But if expenditure dates are not available, this is how you do it, because you make an assumption that expenditures are made evenly throughout the year. All right, students. I hope this is helpful. We'll connect again. Goodbye.